Wow.
So MicroStrategy takes advantage of its position as an operating company to do something that an ETF can't do. An ETF can't issue junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM like we could do, and an ETF can't buy Bitcoin with cash flows. So we have a lot of flexibility as an operating company, and we don't charge that fee. So we have $4.5 billion of Bitcoin, but we don't charge $45 million a year.
In an exhilarating development, Michael Saylor's MicroStrategy distinguishes itself from traditional ETFs by utilizing its status as an operating company. This position allows them to engage in unique financial maneuvers like issuing junk bonds, convertible bonds, and investing in Bitcoin using cash flows, unlike typical ETFs. Boasting an impressive $4.5 billion in Bitcoin without levying the standard $45 million annual fee, MicroStrategy presents a revolutionary investment vehicle. This approach offers a potential yield instead of a fee, leveraging low-interest debt to enhance their Bitcoin holdings. This strategic advantage creates an investment opportunity that promises not only to match but potentially exceed Bitcoin's performance, making it a highly enticing option for investors looking to maximize their returns in the burgeoning world of cryptocurrency. If you aren't yet subscribed, make sure you do so now. We will have back-to-back content on the new Bitcoin ETF, and you wouldn't want to miss that at all. Now, hear what Michael Saylor has to say on how his MicroStrategy might be better than a Bitcoin ETF and even Bitcoin itself.
Every other ETF in the world is on an asset that is not scarce. It's inflationary. You can make more gold, you can make more commodities, you can make $1 billion worth of any of those things. The underlying producers produce more of the asset to deflate or to depreciate the price. With Bitcoin, when $100 billion flows into the Bitcoin spot ETF, there won't be any ability for any producer to produce any more Bitcoin. And so you can't really compare it to the spot ETF of gold, because gold is an inflationary asset, and you can't compare it to ETFs on real estate or on bonds or on equity. You really have to say, this is the first time we ever plugged Wall Street into an asset that you cannot produce any more of. And so nobody knows what will happen, except that if you reason from first principles, you know that it's got to actually perform better than all the other asset ETFs because the underlying fundamentals are just better. But let me lay out 3 possible ways to invest in Bitcoin. One is you buy Bitcoin, the underlying asset. The second is you buy the spot ETF. The third is you buy MicroStrategy. Okay, so we talked about the headaches of buying Bitcoin, the underlying asset. You have to do it on a crypto exchange and put in place parallel custody, compliance, compensation, control systems. So that's the challenge of that. The closest thing, the most compelling idea for a plain vanilla Bitcoin investment of an institutional investor is you buy the spot ETF. You're getting the 1-to-1 correlation. For $1 million you put in, you're getting $1 million of Bitcoin. What's the positive? It's marginable, it's good collateral, I can buy it in a second, no money down, and I don't have to build parallel custody, control, compensation systems. So all of my problems are handled by Wall Street. What's the cost? 50 to 100 basis points a year. Okay, so if I charge you 1% a year over the course of 20 years or over the course of your lifetime, it means that I take 20% of the money you invested at 1%. So there's a cost. 50 basis points means I get 10% of your money, approximately. So, but having said it all, I would pay you 50 to 100 basis points in order to be plugged into Wall Street. And it's not a problem. It's a lot better than the alternative, which is to rebuild all their systems and then finance themselves. So MicroStrategy is not that. MicroStrategy you could think of as a levered long Bitcoin company that pays you a yield. Okay, so I'm not going to call this an ETF, but because we're not a financial company, but we have $4 billion plus of Bitcoin and $2 billion plus of debt. So what we've done is we've levered the balance sheet with debt that costs us about 1.5% interest.
Wow.
So MicroStrategy takes advantage of its position as an operating company to do something that an ETF can't do. An ETF can't issue junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM like we could do, and an ETF can't buy Bitcoin with cash flows. So we have a lot of flexibility as an operating company, and we don't charge that fee. So the real idea here is, what if I created an investment vehicle that paid you a yield instead of charging you a fee? And what if I was able to borrow money at 1.5% interest? I borrowed $1 billion at 0% interest and bought Bitcoin with it.
Insane.
So if you were if you were pro Bitcoin, let me give you a theoretical. If you get a 2% yield instead of paying a 1% fee, it's 60% difference over the lifetime of your asset. So, right. So if you have $1 billion invested and you're getting a 2% yield, right, you're actually picking up $20 million a year, right, instead of paying $10 million a year. So the dynamic of the company is very important. So you can imagine that if I don't charge you a fee, and if I have cheap leverage, then the benefit accrues to the common stock shareholders, right? Because I went and I borrowed $2.2 billion at 1.5% interest, and I bought Bitcoin with it. So what's the logical theoretical yield of Bitcoin? Is it more than 1.5% a year?
Well, I really
Let's say
hope
it
so.
was.
I really hope so.
If it was 15% a year, then we're scraping 14% positive real yield off of the debt, and so that would be 14% of $1 billion dollars or more. Actually, 14% of $2.2 billion. So that would be $300 million a year that accrues to the benefit of the common stock shareholders. You see. So let me make this.
You took advantage of the low interest rates when the low interest rates. I mean, in the low interest rate environment, you took, as you say, you took $1 billion worth. At today, at rates, at yields where they are today, are you still as confident to take the bet?
Well, so this is the benefit of being an operating company. Every quarter we can choose what to do. So some quarters we would issue junk bonds, other quarters we would issue convertible bonds, other quarters we would sell the equity, other quarters we would just use our own cash. So the answer is, there's always going to be a good market, and there's always going to be a bad market, right? There are things you shouldn't do, and there are things you should do. So MicroStrategy, to make a long story short, is a bit more complicated than a spot ETF, right? If you want something plain vanilla and simple, that it should basically correlate 1-to-1 with Bitcoin after you pay the fee, then you buy a spot ETF. But if you wanted to actually try to outperform Bitcoin, like MicroStrategy's outperformed Bitcoin, our performance over the course of the 3 years is higher than Bitcoin performance. So if you want to outperform Bitcoin or outperform the spot ETF, you would do that by accretive financings. Like, for example, if our stock trades at a 30% premium to the underlying assets, and we sell $1 billion of equity, we actually capture $300 million of accretion to our shareholders, you see.
Bill Miller IV from Miller Value Partners provides more perspective on why MicroStrategy is better than Bitcoin ETF.
I think it represents an enormous step forward for institutional capital accessing the asset class. But I think there's actually something out there that's already exposed to Bitcoin, which we've owned for quite a while, which is actually better than a Bitcoin ETF, and that is MicroStrategy. MicroStrategy is better than, in my assessment at least, is better than a Bitcoin ETF for a couple reasons. Number one, it's more liquid. So it's the largest owner of Bitcoin in the world. Not only that, there's no fees attached to it. And so you think about the optionality of owning a new technological asset and being the largest owner of that asset. It provides enormous optionality over the long term. Not only that, you've got a CEO who owns $1 billion worth of stock, who owns $750 million worth of Bitcoin personally. He's a technologist. He's got 31 patents to his name, so he gets it. So, we can talk about the ETFs, but there's already something that's more liquid out there already, and it's really interesting to consider that.